Hello guys and welcome back to another video. And today I'm gonna be giving you 3 heavily discounted dividend stocks to buy right now. Even though the markets are off to a great start here in 2024, then I've still managed to find 3 stocks that right now are trading at a very good valuation and that potentially could be the perfect pickups for your portfolio. But before we get to all of that, then in case you're new to the channel, then my name is Casper and here we strictly talk about investing and financial freedom. So if you really like investing and you want to retire early, well then press that subscribe button below. And also guys, please leave a comment with the video on which stocks you're looking to buy. It would be very interesting to hear your thoughts as well. So moving straight into the first company on my list. And here we have one of the companies with the highest brand loyalty in the world. They basically have customers coming in every single day to buy their products. And that is of course Starbucks. Ticker symbol SBUX. And this is a company that doesn't need much of introduction. It seems like wherever you go to, then you basically see Starbucks coffee shops all over the place. Anyways, when looking at the share price performance, well then during the last month, they are actually down by 2.62%. And during the last 12 months, well then they're actually down by almost 15%. And they just released their quarterly earnings. Well, they did underperform based on the expectations from Wall Street, both domestic and internationally. And their reported revenue for the quarter is $9.43 billion. And the analyst, well, they had expected a revenue of $9.59 billion. However, I personally wouldn't be too concerned about it. I think Starbucks has had a very rough year. But if you are looking 10 to 15 years down the road, then I only think that Starbucks is gonna get bigger and bigger. So right now might be the perfect time to buy Starbucks. But anyways, let's have a look at their dividends. And they currently have a forward dividend yield of 2.42%. And that is pretty decent. But it is almost 21% above their 5-year average of 2%. So we are getting a much nicer cash flow when buying Starbucks today. And when looking at the dividend stats, well, then we do see that Starbucks has a payout ratio of almost 60%, and that is a bit high. However, it is nothing that is too concerning. And they have been growing their dividends every single year for the last 13 years in a row, and that is very nice. Overall, then is the share price for Starbucks looking really attractive. It is getting close to $90 per share, and that is wild to think about. Their dividends are also looking very solid. So right now might be the perfect time to buy Starbucks. So moving on to the second company on my list. And here we have United Parcel Service, ticker symbol UPS. And the share price has dropped by more than 10% during the last month. And when looking at the graph, then we can see that during the end of January, the share price took a heavy beating. And that is because they just released their quarterly earnings. And they did not live up to the expectations from Wall Street. And that resulted in a drop of 6%. And the reason was due to lower volumes and additional charges. However, nothing too serious. And when looking at the share price performance during the last 12 months, well then they're down by 23%. So they have had a very rough year, but they've had a really rough month this month where they've lost more than 10%. But let's move to their dividends. And they have a forward dividend yield of 4.59%. And that is very nice. And it is almost 45% above their 5-year average of 3.18%. So you are getting a much nicer cash flow by buying this company today. And when looking at the dividend stats, well then we do see that they have a very nice 5-year growth rate of more than 12%. So they are actually increasing their dividends at a very aggressive pace, and that is very nice for us dividend investors to see, especially when they already have a very high dividend yield of 4.59%. And they have also been increasing their dividends for the last 14 years in a row, and that is also pretty nice. Overall, then is UPS looking really attractive. They have taken some big beatings during the last year, and the share price is right now looking very attractive, and so is the dividends. So if you have been looking at this company, well then right now might be the perfect time to buy. So moving on to the third and last company on my list, and here we have Chevron, ticker symbol SVX. And this is one of the largest oil and gas companies in the world. And when looking at the share price, then they're during the last month down by 1.69%. And over the last 12 months, well then they're down by almost 14%. So they have definitely taken some big hits during the last 12 months. And they are right now trading at a pretty good valuation. But let's just have a look at their dividends as well. And they currently have a forward dividend yield of 4.08%, and that is pretty good. However, it is actually almost 9% below their 5-year average of 4.48%, and that is simply because they paid out huge amounts of dividends during the COVID-19 pandemic. And when looking at the dividend stats, then we do also see that they have a payout ratio sitting at 43%, and that is absolutely perfect. It is just where the payout ratio should be. And they have a 5-year growth rate in their dividends of just above 6%. And even though that is not absolutely amazing, then it is still pretty good, especially when considering that they already have a very nice dividend yield. And they have been growing their dividends for the last 36 years in a row, and that is absolutely amazing. Chevron is definitely a high quality stock, and right now they trading at a pretty good valuation, and their dividends are looking absolutely amazing. So if you don't already have Chevron, then I would highly recommend you to look further into it. And these were basically my discounted dividend stocks to buy here in February. However, I do also have some potential stocks that you should be looking out for. And the first one on my list is Exxon, ticker symbol XOM. And they are pretty much in zero during the last month. However, during the last 12 months, they have dropped by more than 11%. So it is definitely trading at a pretty good price right now. And the next company on my list is Extra Space Storage, ticker symbol EXR. And they are down by almost 13% during the last month, and that is a lot. And during the last 12 months, they are down by 14%. So there is definitely some discounts to be found here as well, especially when looking at the share price right now. And the last one to look out for is General Mills, ticker symbol GIS. And General Mills are down by roughly 1% during the last month, and during the last 12 months, they're down by more than 14%. And this is a very good buy at the moment. And I was actually thinking about including this one into the video today. So I do think that General Mills is trading at a very, very good valuation right now. And these were basically all of my top picks for February. If there's anything you'd like to add to the list, then please let me know in the comment section below. And that was basically all I had today. Thank you for watching the video. I hope that you liked the video, and if you did, then don't forget to press the like button below and subscribe to my channel for more weekly content just like this one. See you guys in the next one.